What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we're going to be taking a peek over here at the Bitcoin price chart. But what I really wanted to do in this video was talk more about the macro element of all markets today and kind of tie them all in. And speaking of stocks, the sponsor of this video is Link2. If you guys know, I've had very few sponsors on my channel throughout the history of my YouTube channel, but Link2 is a company that I do believe in. Recently, we're interviewed over there on NASDAQ, and they actually offer private equity in companies before they go public, before they actually hit the stock market. And I actually own more private equity in pre-IPO than I do of actual stocks in the stock market. And as today's sponsor, if you're unfamiliar with Link2, they give you the ability as an accredited investor to invest in pre-IPO companies such as Ripple, Uphold, Link2, BitPay, BlockFi, Dapper Labs, lots of cryptocurrency companies over here and lots of other companies as well. The process of getting accredited over here on Link2 is very simple, and they'll walk you right through it. And even if you're not an accredited investor, Link2 does offer a lot of educational content and newsletter information that they will fill you in on the pre-IPO or the private equity market, and you can get that sent directly into your inbox. So you can even sign up over here even if you're not accredited. Otherwise, you can check out Link2 by visiting the link in the description of this video and check out all the companies that they have available to invest in the private equity market. Moving back to the charts. Today, I'm going to kind of outline a lot of the things that are kind of like the line in the sand for me, where I would start getting really worried about the market. I pointed a lot of the optimistic things out there and a lot of the good things that I do see, but where are those lines in the sand that are really bad? And I think we got to kind of start by just like talking about the actual stock market. As we've discussed many times throughout the years here on this YouTube channel, is how cryptocurrency and Bitcoin has been tied to the stock market. And well, ever since the stock market really kind of went on this run and then kind of paused out right in here and started ranging in this area. This just so happened to be back in April of 2021, once the ranging really started to play out in here. And now, we haven't really seen any action in the cryptocurrency market ever since then. But the big question is, are we rolling over? Is this thing actually heading way back down? If that's the case, that's likely not a good thing for the cryptocurrency market based on what we've seen in the past. So I thought we'd kind of tie in a lot of stuff from the stock market. Is this the pop of the stock market? Is that something to be worried about? And while we do have these familiar structures that we've seen over here in the altcoin market and Ethereum, like we've seen with Bitcoin in 2017 and we've seen with Ethereum in 2016, what would happen if these things were to start to break, right? Where would prices end up going after that? If these levels didn't hold, if the structures did change and we started to see prices actually start tanking way back down and go back below our 2017, 2018 all-time highs. And so when we've seen corrections like this play out in the cryptocurrency market before, there was a pretty clear level that ended up holding in here. And for total three, the altcoin market cap, excluding Bitcoin, excluding Ethereum, that level's $366 billion. If that level were to go breached below, it would be lower than what we had seen in these corrections previously. For Ethereum, that price is about $1,500, a little bit above $1,500. If Ethereum were to crack through that $1,500 price level, the next logical place I could see as being a real support outside of the all-time high would really be way back down in here near $800 for Ethereum. To see how something like that could happen, we can look at where Cardano has most recently gone to see that that is the location that Cardano has pulled itself back down into, which for Ethereum is down here near $800. And well, for the altcoin market, a pretty big pull down as well, getting down there to like $175 billion. That would not be ideal, right? That'd be a pretty rough ride back down in there. Again, we're still holding above these all-time highs, these structures. This is what we've looked at. I've shown it too many times to count on this YouTube channel at this point, how we've seen these corrections play out like this and that these levels can hold down in here. But the bigger question comes out there of like, what if the stock market is actually going into a real big fall at this point, right? That's an element that historically has impacted the cryptocurrency market. Now, what's interesting about it is that the cryptocurrency market kind of already knew that we were going to pause out here, right? Back there in April, that's where the ranging all started for the Dow Jones. That's where crypto really topped out in there. The crypto market knew it at the time that was the top for the Dow Jones at the time, right? But the big question comes now is this thing rolling over? Are we now starting to roll over and continue going down further once again? And we can go back and grab like this moment. And this will make everybody sick to their stomach looking at it, but we'll do it anyway in here to say, hey, what if we're just doing something like this and this is just part of our rolling action that we have heading on down in here? Well, this is going to be massive economic problems. This would be massive technical damage to the charts. This would just end up being way more than a recession. And when I think about this, because of the fact that it's printed such a big bubble, that any type of move like that, if we saw another great financial crisis style move where you saw like a 55-60% fall coming out in here, this is massive technical damage that would happen to this chart, creating a pop of the Dow Jones Industrial Average bubble. Put it on a scale like that, you see that would be the end. Now, one of the main components of the Dow Jones is Apple. Apple is one of the biggest components of all stocks out in there. And the question is whether or not Apple has popped at this point. It's been a massive bubble printed for many years at this point. Is this the pop of Apple? I don't know. We know we saw the pop of ARK. We saw the pop of Netflix. It sure looks like the pop of Amazon has begun, potentially Google as well. And looking over here at the NASDAQ, has the pop already begun? Or, like we talk about all the time, there's like the big initial profit take that happens. Then you go on with a bearish divergence, and then you go on into your really big pop. So looking at how the NASDAQ has grinded its way up here, and then such a quick pull down in here, does that look familiar? Well, it should. It's very similar to what happened here in the cryptocurrency market, right? Big grind up, big run that happened in here, and then eventually a big fall back down that eventually went on to have a bearish divergence with a new high coming in here. And that you can see how it worked. It had a couple of waves and then a big fall, waves, and then now a big fall. And then it could just be recovering in here and then working its way up for one more, which would satisfy a full 4.236 extension. And if I had to lean on my guesses of what I think is going to happen, that's where I'm leaning on my guessing. Because the Dow came up just shy of the 4.236 extension. That's been a 12 to 13 year bubble being printed. The NASDAQ has come up just shy of a 4.236 extension. This is a 22-year long bubble being printed. So they're being printed on different time frames, yet both reaching out to the same extensions, coming up just slightly short. We know on Bitcoin's market cap, that's how it worked out in here, right? A little bit short of that 4.236 extension, the first big profit take, then it goes on and hits the all-time high, hits the 4.236. Same thing happens over here for Ethereum, right? Gets up there, gets near that 4.236, first initial profit take, then it goes on and finally goes off and hits it. And we can even see over here on the NASDAQ where it is pulled back down into. This is also the same levels where Ethereum was pulling back down into as its first major profit take in here, and then working its way on for its final reach out, and then it was over. But you can see in here, it still had to work its way out for quite a while, right? Revisiting the lows multiple times. And well, how many times have we visited the low down here? We have visited it one time. But then we kind of already had our first initial fall in here. We've had our first initial fall, some sideways action, and then finally going on and reaching down to the lows. So even in the scenario for the NASDAQ, if it's to recover in here and go on and set some type of new high, what seems logical, revisiting the lows, scaring everybody pretty bad down in here still before going on and doing that. Which, same concept for the Dow, right? Being some type of an A, B, C correction in here, rolling back up to retracement levels and waves of near equal length in here in order to then go on and hit its 4.236 extension and then lights out. But the hard part about this, of course, is all the things that are going on out there in the economy right now, right? Inflation is running out of control, and inflation was used as a sort of narrative for Bitcoin in 2021 and 2022. However, inflation never really actually helped Bitcoin. By the time everybody was screaming about inflation, Bitcoin's price never really rose. We can look over here on Google Trends to see how much people are searching for inflation, and it is absolutely record high of how much searching for inflation is happening in here. And we all know it, right? Whether you're having to pay more to rent a house or an apartment, whether you're trying to buy a house and it's more expensive, or if your property taxes go up and your escrow goes up, making your mortgage more expensive. Every time you go to the gasoline pump, when you're buying your groceries, paying for your electricity, everything is more expensive right now. And the question is, does that restrain people from being able to invest because they just don't have the extra disposable income to be able to do it. We know that the personal savings rate is very low right now. So people are not saving their paychecks and they're racking up credit card debt right now. Those are kind of the polar opposite things of what you see for money to be flying into markets. You would like to see lots of disposable income and not racking up a bunch of debt at the same time. And then, of course, yesterday we started quantitative tightening with the Fed, and they've been recently raising interest rates, with bond yields also rising. And of course, the dollar has been sitting pretty high. So all these conditions have been like, yeah, all these crypto charts and all these structures, they look good. They look like what we've seen before. And not only do they look good, they look like what things look like before they go rampaging. So not even like, oh yeah, it looks like, they're creating some type of setup that even just goes into a retracement or goes into something simple. The setups that are happening here, if they're doing these structures are like rampaging structures. They're not like stock market crashing type of structures. And like we've talked about, enough time has elapsed and structurally for an entire bear market for Bitcoin to have already completed itself in here from being back there back in April, that enough time has elapsed here for capitulation to have already occurred and be done. But the big element out there that we don't have the answer to is with the stock market. And we've always seen that crypto has a tendency to follow the stock market. And right now, the Dow Jones has done nothing but a series of lower lows and lower highs, and we haven't seen this thing reverse or at least be able to print its first initial higher high, which for the Dow Jones is going to be there at about 35,600 to have its first higher high. Right now, still lower lows. It came in here with a 1, 2, 3, 4, 5, and for that to all occur right there at the base down in here, this all looks really good to me and optimistic to me for what you want to see before it starts moving its way up. But the reality is it hasn't yet. We don't have the answer yet on if it's going to just keep rolling. And the problem with this is that I try to avoid narratives as much as possible, right? Because narratives always have a tendency to make us want to FOMO, YOLO, buy things at the top. They make us want to, in terrified fear, sell bottoms. It's just very common for what happens with narratives. But the reality is the financial conditions out there in the world are quite different right now. Whether or not that's going to impact this and say we have to roll over immediately and go down, or do we have the one last bearish divergence to do a full extension and then things start falling apart? But we know the Fed has started tightening. We know the Fed has started raising rates. We know that consumer savings is low. Credit card usage is high. Consumer sentiment is low. And inflation is sky high. These are all different elements, right, in the markets that we haven't seen before. So I've spent time thinking to myself, at what point do I draw the line in the sand and I just start saying, man, this looks really bad globally. Like, just everything looks bad. The technicals look bad. Everything looks bad. Where do I draw that line in the sand where I'm just like, man, it's hard to really try to find any type of optimism remaining left in this market? And I'll show you the things and the thoughts that go through my mind of saying, where do things suddenly start getting really bad? And it's not just on one chart, but it would be like a multiple of a lot of different things. And so I'll show you all of those things. One of the things we've talked about in here, and I'm not huge on trend lines. A lot of you guys know that I'm not huge on trend lines, but we have been talking about how Bitcoin has resided within a 3-year-long parallel channel in here that it's really pinpoint nailed in here, right? So if Bitcoin started taking out this channel that it's been in for this long, that would be kind of one ding on there of like, okay, well, we're not within there anymore. And that happens at about 26,500. So essentially wanting to see the current lows actually end up holding in here for Bitcoin and for us not to set new lows. If we started setting new lows on Bitcoin, that would be that's not good. We know that Bitcoin's previous corrections have all taken it down about 85%. And for Bitcoin, that's at about $10,000 to $13,000 down in there. Again, we've seen Bitcoin play out the full time period of an entire bear market already. So from a time perspective, it has already done something like that with even the capitulation phase. And we even had a black swan event occur during the capitulation phase to cause extreme fear in this market. But if we started taking out the lows that were set down in here, okay, well, the first step is, one, we've now lost this 3-year channel that we've been in. That's one ding. 2, if the altcoin market started losing this area over here, so $580 billion for the altcoin market. If we lost that, that would be another one. if the DXY started setting new highs beyond where it's at right now, we've seen a good rejection happen in here. It's normal for these things to come back in for retracements. But if the DXY started setting new highs, that would be another thing, because that would also indicate that the euro would be breaking down, which would deviate away from what we've seen happen in here before and what we've been looking at over here on the euro and the DXY. So seeing the euro hold, seeing the DXY hold, if we lost this level on the euro and the DXY started to break out, that would be another ding. And if the Dow Jones took out that low down in there. If that low got taken out, I, one, would be really nervous if I saw that getting taken out. And then especially, I would get really, really, really uncomfortable if we took out the high from back in February of 2020 and we started going below those levels. We go below there, I would have just such a hard time painting any type of bullish picture in the stock market or in crypto. And so all of these things are kind of like all at these levels, right? You've got the altcoin market sitting at its level. You got the Dow's low already put in. You got the DXY's top put in, the Euro USD's lows put in. So long as all of those things hold, then we may as well be on our way to something glorious. But if those broke, that is where I would start getting really uncomfortable and really worried about not just crypto, not just the stock market, but really just the economic landscape of the entire world at that point. Because it would likely indicate very dark times are coming ahead of us economically. And then we know that when dark economic times come, what happens? Civil unrest, all that kind of stuff ends up coming too. So we don't want any of that, right? I don't want any of that. But the reality is the economic picture in regards to the Fed, with the quantitative tightening, with the interest rate hikes, with the inflation out of control, with consumer sentiment so low, with consumer spending still at about the same. However, consumer savings is low and consumers are racking up credit card debt. These are all moving variables, right? And TXMC Trades does a really good job kind of illustrating all that stuff. I love bringing him on the channel to talk about that, and I love watching his videos too. But I try to stick to the charts, right? A lot of those elements out there make me worried, make me concerned. And of course, those, whenever we have a lot of negative price action, we have a tendency to grasp onto those things a whole lot harder too. I know that, everybody's guilty of it. I'm guilty of it. When prices are down, Helene Meisler has this pinned tweet that she's always had here at the top since 2016. Nothing like price to change sentiment, right? Go back to April, right? Go back to April when the Bitcoin conference was happening. Everybody was still excited, euphoric, happy, having a good time. Move into May, suddenly everybody's scared the world is falling apart. And that's because price can really impact our sentiment at the same time. We'll say, wait a minute, this is how I'm feeling. I'm not liking what this is feeling like. Is there anything fundamentally that can validate actions I can take to relieve me of the pain that I'm feeling right now? So if we're feeling a lot of pain after prices are going down, we'll actively search for news narratives to support wanting to sell at that time, because prices will continue going lower and we can relieve ourselves from the pain at this point. It's just normal. And then the same thing happens for when prices are going up. We try to search for and validate with narratives of the prices are really high, but it's okay if I buy it because the prices are going to keep going up higher. And that's just biases. But there is no question that the monetary landscape out there is now changing at this point, and there's no question that these indexes or these indices are all very high, including the Dow Jones and the NASDAQ, both getting very close to 4.236 extensions, but both not quite getting there. And so my case for the market right now is that, yes, these indices don't have very much higher to go. And yes, that I probably do think a big crash in these indices are coming next, but they haven't reached these 4.236 extensions yet. This is all too familiar of what happens on the first initial profit take before it goes off to actually hit the 4.236 extension, as we saw over here on Ethereum and over here on Bitcoin before they went on to hit their 4.236 extensions. That we have very similar things happening here for the NASDAQ, and that there's been no real big profit take that has happened in this market yet, that it would be logical that this is the one, but that the big bearish divergence is arriving next, which would also provide the opportunity for the altcoin market to get another push. And as you guys know, or at least most of you guys know, the stuff that went off into the all-time highs and did like the 40, 50,000% rise is, right, I'm not in any of that stuff. I'm in a lot of the stuff that still hasn't broken out into all-time highs. But of course, even in then, I've been subjected to a lot of pain in this market. A lot of stuff is still very low, but a lot of good things have not gone on their bull runs. And that's where I'm like, this has to be the moment where they get their opportunity to shine. And all these speculative things like I won't name projects, but things that just don't work, right? Got very big rises, but obviously have fundamental problems with them, whether their networks are shutting down or have catastrophic coding that ends up breaking them. That those were the ones that got the big rises, but yet the ones that had all the building throughout the bear market of 2018, 19, and 20 still haven't had an opportunity to capitalize on all that network value that was added. That's where I'm focused on. And we'll find out if that ends up being right or wrong. But for there to be a rise in the altcoin market, it would make logical sense that there still is one more reach out there over there in the stock market for the NASDAQ and for the Dow Jones Industrial Average to get those 4.236 extension reach outs, which would also make logical sense for a falling DXY and a rising Euro USD. But I wanted to show you all the things where kind of like the line is drawn in the sand for me on where I would start saying, oh gosh, what is happening out in here? All these things look really bad on the charts because the fundamental monetary narrative is really bad out there. But where do things suddenly start looking really bad on the charts for me too? And that's those breaks there in the altcoin market, the breaks in Bitcoin, the breaks in the Dow Jones, the breaks in the Euro, the breaks in the DXY. Those are all those levels where if all those things got taken out, who knows how bad it would really actually get out there. In addition, we could look at even like bond yields, and bond yields have gotten back to their levels from back in November and December of 2018, in which these were even the same price levels that these bond yields got to, where the capitulation of Bitcoin happened back at that time. So we've kind of even reached kind of this max push over here in bond yields over here on the 30-year, 10-year, and 5-year. So they're all like right there at that point. So these two, if these broke out, you essentially see investors flocking to safety, even with low interest rate payments on them. They're finding more safety in cash by going to bonds and 10-year bonds. In which, why does the 10-year U.S. Treasury yield matter? Because they're backed by the U.S. government, and Treasury securities are seen as a safer investment relative to stocks. So those two, if those broke out as well. But right now, all those things are holding. So I remain optimistic for that. But if they got taken out, I don't know how bad things would get beyond that. And I think one of the kind of controversial things out there has to do with the 200-week moving average, which is sitting down there at about $22,000 for Bitcoin. But, from like a technical standpoint or a price standpoint, it's kind of an odd place that price would just kind of stop at. We can look at that right in here, that looking over here to the left, there's no support levels over here. There's no support levels over here that would indicate anything that beyond just a moving average being right in there. So I'm not so convinced that, one, that we even have to go down and touch the 200-week moving average, or two, if we did actually break lower and we started heading down to that 200-week moving average, that there's just so much open space in here that it just doesn't seem like it would actually end up being a support level to me. So I want to see the current lows hold over there for Bitcoin, and at the same time see the lows hold over there in the altcoin market as well. And the Dow Jones and the NASDAQ, which seems pretty likely it will probably revisit the lows again, but that the DXY has topped and doesn't set a new high, and the Euro holds down in here at the lows, which it pinpoint did right on time, right on schedule. Absolutely amazing that we had like the capitulative, terrifying moment in crypto happen at the exact same time that these things happened over here on the DXY and the Euro. Those are all super optimistic. But that's kind of my line in the sand. You start breaking down below there. Holy cow, what's going on? So that's kind of where I'm at with all of it. And I wanted to talk about that because I see so much talk and worry about a fall and a recession happening in the stock market. And we do know that, the companies are going to have lower earnings for the next couple of quarters. So, and the stock market should already know that. You would think they would, but there's like we talked about when I had the podcast style video with TXMC Trades, we're talking about inventories that, Walmart, Target, all of these retailers are going to have tons of inventories. They're going to have to reduce prices to get rid of all these inventories and then get rid of employees, and that all that's coming down in the pike. But if there was like a bigger break that happened here in the stock market beyond where it's at, if this isn't an ABC, and if we go take out lows lower than here, that from a bubble perspective of what has happened here on the stock market, that it would indicate far worse than just a great recession is what my thinking is just from a chart perspective. And so the question I have to ask myself is, are we going into that moment right now? And if we are going into that moment, that's not good at all. And every time we do have a pull down, everybody does become convinced that it is that moment right now. But while we hold the prices that we're at right now, I can't commit to saying I think we're going into a Great Depression. But if we did go below here, I'm not the one sitting here saying, I think we're just going to have a recession and it's all going to be good. I'd be saying, dude, this is likely the pop of the actual stock market, and there's years of bad coming ahead of us. And I think that's coming no matter what, whether it's coming right now or whether or not we do go on to hit the 4.236 extension and then go. I think that is in the cards, and I do think that's going to happen in our lifetimes. But the big question is it happening right here, right now, or is there one more wave to the upside? And I've kind of built my case on why I'm leaning more towards it being that there is one more wave left in the market. And that moment, that worry of everybody with the Great Depression and all that stuff, I think there's validity to having that argument. Totally feel that way. From a monetary standpoint, this economy is just running on gas fumes. But when I'm doing everything just on charts and stuff, I can create, valid arguments to say there's still one more push, and that we're likely seeing the initial profit taking happening in here before we go on and finish everything off like we see over here on the NASDAQ. So that's my case. But I showed you all the things that kind of like I draw the line in the sand to say, I don't know. I don't know about that anymore. If that DXY breaks into new highs, Euro breaks down, Dow Jones breaks below the February 2020 highs, Altcoin market breaks below its lows, Bitcoin starts taking out its channels, and if all the bond yields start breaking out, all those things, they all start happening at the same time. I'll be in that watch out, this might get really bad moment. But if we're not in that, and we are doing this, and we're going on to hit a full 4.236 extension, then that's the most exciting time of a market, and then it'll be a pretty fun time ahead. Because while all of those are the resistances and the support levels, the reality is they're all getting to them at the exact same time. And if it's the reversal points for all of them, and not their breakthrough, breakdown, breakout moments, but their reversal points, it might be a really exciting time ahead. So it can be looked at as, if all of these break, that's really, really bad. But it can also be looked at, they all got to these exact same levels at the exact same times. And these are typical reversal levels as well. So fingers crossed that's what happens. But it's no question, this is a wild time we're living in right now. And the concerns that are out there are different from the concerns we've had in the past. And like I do say, I'm not a monetary expert or a Federal Reserve reading expert or a financial advisor. These are all just things that I look at and come to my own conclusions and share them with you. And maybe you can find your own correlations between all of them. But I find all of it very interesting. And those are the points at which I would start being like, But at the same time, I'm like, hey, we're all here at the exact same time. It looks pretty good for a reversal. And that's what my fingers are crossed for. So, all right. You guys can follow me over here on Twitter at bcbacker. I intended to only put out a couple of videos this week, but it's been such a busy week regardless that I put out a long video today. I think this thing's going on like 30 minutes at this point. This will be the last video of the week, unless all those price levels break. As long as all those things are still holding, this will be the last video of the week, and I'll catch you guys there on Monday. And so on that note, I hope that you guys have a wonderful weekend. Again, thank you to Link2 for being the sponsor of this video. Private investing made simple, where you can invest in private equity of companies prior to them going public. There's a link in each of my videos down here to Link2. And on that note, I'm going to wrap this thing up, and I hope that you guys have a wonderful weekend. So thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice, and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.